Hello and welcome to Williams Mullen's Benefits Companion, a podcast that helps employers navigate the complex legal challenges of managing their employee benefit plans. I'm your host, Brydon DeWitt, and today I'll be joined by Philip Delano, an associate in our tax section, to discuss the Employee Retention Tax Credit. How are you doing today, Philip?
Doing great. Good to be here.
Well, I thought, you and I have been helping clients with the Employee Retention Tax Credit, and I thought it'd be a really good idea to have you on to discuss the credit because there's a lot of money on the table for employers as the credit has been expanded from 2020. Last year, when the pandemic hit, we had a flurry of relief legislation, and the first round was the FFCRA, and that included credits for paid sick leave and paid family and medical leave for employees who had to either had COVID or had to take care of family members who had COVID, or they had to get a diagnosis for COVID. And so certain employers were required, if you had 500 fewer employees, to provide the leave, and then there were tax credits. And then the CARES Act later was passed shortly thereafter. And Congress said, well, okay, we also need to give credits not only for people who have to take leave, but we're going to give credits to encourage employers to keep employees on the payroll, to continue to employ employees. And the credits were provided to employers that were impacted by a government partial or full shutdown of their business. And also employers, another way you could qualify for the credit is if the employer had a reduction in gross receipts in a 2020 quarter that was reduced below 50% of their gross receipts for the same quarter in 2019. And so employers who qualified for the credit either one of those ways, through a 50% decline in gross receipts or due to a government shutdown, receive a tax credit for up to $10,000 per year for employees who they kept on the payroll. And employers that had under 100 employees got the credit for all their employees, even employees who weren't working and employees who were working. And so this was an effort by the government to provide an incentive and assistance for employers to keep employees employed. But at the end of 2020, the Employee Retention Tax Credit was only for 2020. We had the Consolidated Appropriations Act, and then early in 2021, we had the American Rescue Plan Act that continued the Employee Retention Credit and expanded it. And Philip, I thought it'd be great if you kind of go through some of the changes for 2021 for the Employee Retention Tax Credit.
Sure. So basically everything just made the credit more valuable and increased the eligibility criteria. So if we look at what the significant decline in gross receipts was that you mentioned, Brydon, originally you had to have a decline of 50% in 2020 as compared to 2019 to have the starting point. But then in 2021, all four quarters now, any quarter where you're less than an 80% decline still qualifies. So that's a lot of extra space there.
Right. So it's only a 20% decline and it's still compared to 2019.
Correct.
Correct. 2018 receipts. Yeah.
And then if you look at you'd already mentioned the number of eligible employees, it increased to 500 up from 100, which that was retroactive in 2020. So that's not a completely new change, but still that increased threshold expands a lot more employers to potentially be eligible. And then the biggest one I'd say is probably the increase in the credit percentage. So in 2020, that percentage was only 50% of qualifying wages, which you mentioned was the $10,000 per employee. So essentially the credit's going up from $5,000 per employee to $7,000. And that's available on a quarterly basis. So the total for an employee, if you were eligible for the credit all year, would go up to $28,000 for 2021.
Yeah, and that's an important change as well. The limit, the qualifying wage limit that you use to calculate the credit was formerly only 50% of $10,000, but it was only $10,000 for the whole year. Now it's $10,000 per quarter.
Right. So that's a huge amount, a huge increase from last year.
And then another issue that you and I looked at was the way that you qualify for the credit. An employer has some options throughout the year as to whether they are going to compare the current quarter to the same quarter in 2019, or whether they can, or that's one way to qualify. The other way to qualify is to look at the prior calendar quarter in 2021. So what this means is if you qualify for the credit, that your gross receipts are 20%, down 20% from the same quarter in 2019, the employer is going to qualify for the credit for the next calendar quarter pretty much automatically, regardless of gross receipts. So in that quarter. So if you have a 20% decline in the first quarter of 2021, in the second quarter of 2021, even if your gross receipts are only 10% down, or even if they're the same for the same quarter in 2019, because the employer qualified for the first quarter, they're going to automatically qualify for the second quarter. And so that's, it really extends the availability of the credit, which has already been expanded greatly with the increases in the percentage of qualifying wages and the increase in the cap of qualifying wages.
Right. That quarter by quarter analysis for eligibility really helps in 2021, because there was the chance in 2020 that if you had started with the 50% decline and then exited the 80%, but then you, for some reason, had another decline, if you didn't meet the 50% criteria, then you were out of luck. But now it's just a quarter by quarter analysis, like you said. So that's great.
Well, that'll wrap up our discussion, Philip. Thank you for joining us on the Benefits Companion. I just really think it's important for employers to realize and to be aware of this significant expansion of the Employee Retention Tax Credit. If listeners have any questions or suggestions for future episodes of this podcast, please contact me. You can also visit our employee benefits page at williamsmullen.com/employee benefits. There you can find out more about our team as well as past episodes of this podcast and legal alerts. Be sure to subscribe to this podcast to be notified when our next episode posts. Thanks for listening.